What does an arcade have to do with investments? Have you ever been to the arcade and thought about your investment? When you go to an arcade, how do you decide where to spend your tokens? Do you spend it all on the game that gives you the most tickets? Do you spend it all on the game that might give you the fewest tickets but a consistent amount? Do you spend it all on arcades or video games that don't give you any tickets? If you look at the games that pay out the most tickets, you typically find that they pay out fewer times. And if you look at the games that pay out less tickets, they typically pay out more often. Investments is the exact same way. Typically, an investment that gives you a bigger percentage back has a higher risk of losing money. And typically, investments that give a lower rate of return back have a higher possibility of that return happening. Why is this important to think about? Because investments all depend on risk and reward. The higher risk you take, the higher reward you expect, but that risk represents a possibility of not making as much money as something that has lower risk or a higher rate of a lower return. Investments are broken down by their risk level. A low-level risk investment looks like a CD or a certificate on deposit. A medium level of risk looks like a stock that's traded on the market like the New York Stock Exchange. And a high level of risk looks like a hedge fund where investors take higher risk for higher reward. How do you know what company to invest in? There's simple questions you can look at to help you make these decisions. The first question is the company healthy and does it make money? The second question, will the company grow? Typically, companies that just make money won't have a higher stock return than companies that are growing, companies that are expanding, companies that are taking bigger chunks of market share. You also see when you invest money the importance of diversification. Ever heard of the term, all your eggs in one basket? Now, why would this be dangerous? Because if you drop the basket, all your eggs are broke. Same thing with investment. If you put all your money in one investment, if that investment doesn't work out the way that you thought it should, then all your money is at risk. Investments reflect the exact same thing, where if you diversify your investments and you buy multiple companies or you invest in multiple options available to you, then you run a lower risk of losing money that's maybe wrapped up in one stock. So diversification acts as a way to protect your money. How do you think about a way you can diversify your gaming experience to get more tickets and have a better possibility of leaving with the most tickets?